Welcome to another episode of Our 2 Cents. This is a program where we share our 2 cents and exchange views on uniquely Singapore money topics. So in this episode, we'll be talking about Hello everybody, my name is Yang Zhi, I'm the host, and together with me today is Alvin and Chris from Dr. Wealth, as well as Hazel and Kathy from the Joyful Investors. So for today, it will be a New Year episode. So we want to start off by taking stock on some of the significant events that happened in 2021. So many things happened. In the beginning of the year, Joe Biden took office, and then, sometime down the road, there was a China crackdown, and then the Evergrande debt problems. And also now, I think there are a lot of new norms as the world is trying to live with COVID. So the first question we have for you all is this, right? Which event had the biggest impact in your life financially this year? And what is your biggest takeaway from that? So perhaps let's hear from Hazel first. So what was the one that has the biggest impact on you?
Well, for me, the China sell-off resulted in some drawdowns in my portfolio. In 2021, we had a heavier than usual allocation towards the China tech stocks, such as Alibaba, Tencent, as compared to the US stocks, which we believe we will see significant outperformance coming in the future quarters to come. So although we are having some paper losses in our portfolio right now, we felt that it was the right thing to do and to be well positioned before the next wave up. So in terms of takeaways, or if there is anything that we might otherwise have done differently, the answer is we would still have done the same. And it was reasonable to expect that the recovery could take longer and that we would not be able to precisely pick the bottoms. But in investing, it is really not about expecting not to have any paper losses at all in your investing journey, but rather knowing how to position your portfolio well from time to time.
I see. So I think an important part of this is that we have to remain calm also.
Yes,
right?
yes.
As a saying that investing is not just about the brain, but also about the stomach.
Yes, the psychology is very important.
Yeah. Thanks for sharing. Alvin, how about you?
So for me, it's similar to what Hazel has mentioned. China has been a part of the portfolio that I have, and this year China stocks have not really recovered, and it seems prolonged than what people actually expect. Then when I went to review the situation and do some stock taking, there are some things I learned. All right, the first is that we are very used to investing in the West because a lot of investing literature comes from the West, but we have to understand the system, the government political system is very different from the West versus China, right? So we can see that China has a lot of top-down kind of policy making, a lot of influence on what's going to happen in even the next few years, right? Because they really chart, they have a 5-year plan, they have a 10-year plan, all these kind of things. And they have almost absolute control, right? Not like in the US, their government system is a lot separate. You have the legislative system, you have the executive system, and you have the judicial system that's separate, right? But in China, it could be said that it's meshed into one, and they have absolute power to control what's going to happen. So any clampdown becomes very, very effective in curtailing all these kind of activities that they don't like, right? So once we understand that, that means investing in China, we need to take into consideration what is the government's plan, right? What is their Greater Bay Area plan? What is their Made in China 2025? So they actually give you a clue where they are favoring, which industry they're actually favoring, right? So in the West, it's not important what the government says it's going to do, right? Because of the different way that they cut out the political power, it's very difficult even for the president to influence any industry, whether he wants or don't want it to prosper, right? So in China, I think that is one key thing that we need to consider, which is the government policy. So we need to read beyond just business policies, business plans. We need to read the government policy as well. Yeah, so those are the things that I learned from.
Okay, so over to you, Kathy. So what was your biggest takeaway for this year?
Yeah, so similarly as Alvin and Hazel is the China sell-off, because Hazel and I share the same company portfolio. So I think we would like to take this chance to share with fellow investors that it's very important to buy stocks based on your own conviction and not copy trade from other successful investors. So because if you do that, right, when things go south, it's very easy to throw in the towel, especially if the investment decision was from someone else. Yeah, and another thing that I would like to share is don't be afraid of bear market. There's no reason to be afraid of it, because bear market is just simply part of a market cycle, just like we expect winter to come as the season goes by. Yeah, so a new bull market will always have to come against a wall of worries. Yeah, before everyone start to think that the market is going up again. Yeah.
Okay, so basically you need to have conviction in whatever you invest in, and then also expect that bear markets, economic downturns are part and parcel of investing.
Yeah, and don't listen
be realistic to it.
Yeah, and don't listen to what other people say.
But must listen to your mother.
So you must do your own homework. Yeah.
Okay. Yeah, thanks, Kathy. Chris, how about you? Is it China also?
Okay, so I think the most important thing to realize about my portfolio is that we're not invested in China. So we didn't face the kind of drawdown that's been experienced by the people who are invested in Chinese markets. And a large part of it was because I'm stubborn, and because in the year 2020, the Singapore stock market was the worst in Asia, right? And we did the bulk of our investments at the time. So this year we're up about 11%, and the drawdowns that we had in 2021 has been minimal. And so the worst point in time for this year was the arrival of the Delta strain. Okay, and for the Delta strain, it's not so much of a lesson that we've learned from the Delta strain, but the possibility is that with different surges in the COVID-19 virus, you're seeing the world becoming more and more mentally prepared for disaster. And after the Delta strain, we're now facing the Omicron strain. And I'm actually quite cautiously optimistic as to how bad the dip is going to be, right? And so, based on what I've experienced in February, I believe that this is a good time to do a little bit of bargain hunting. Yeah, that's all.
So your takeaway is more that the markets are kind of like desensitized.
Yeah, that's right.
The more and more variants come out.
Yeah, that's right.
Okay, so this is a New Year episode, right? Of course, we're going to talk about New Year resolutions. So we are already in December of 2021. Do you all make New Year resolutions? And if you have, right, what have you made for 2022? Maybe let's start with the ladies. Kathy, do you make resolutions?
I do not have resolutions specifically for the new year. Yeah. So if something is important and urgent, then I will just do it right away and not wait until now is the new year or another few more months is the new year, then I do it. Yeah.
So you don't believe New Year, New Me?
You can have resolutions for yourself, but no need to be a New Year resolution.
I see. Okay.
Yeah.
Every day is a new day.
Yeah.
That's great. How about yourself, Hazel?
Well, actually for myself, I also don't usually set New Year resolutions.
Oh, okay.
Yeah, and I think there are some people who set New Year resolutions as a way to push the thing that they want to do further away, to buy them more time and say, okay, this year I'm going to do this, or next, okay, never mind, this year cannot achieve, next year I will set this again. Yeah, so just like what Kathy has mentioned about procrastination, as Charles Dickens says, procrastination is the thief of time. So when we procrastinate, we're actually stealing our own time and wasting our own time. So for myself, instead of setting New Year resolutions, I do have yearly goals, because the way I see resolutions and goals are slightly different. For me, resolutions can be just very broader statements that just indicates your intention to want to do something or not to do something. Whereas goals are more specific targets. So in comparison, I would think that goals comes with a high level of commitment in general as compared to resolutions. So for myself, a yearly goal that I have for personal finance and investing is for my investment portfolio to be outperforming the markets that we are mainly invested in. So like for example, this year, because we have a heavy concentration in China tech stocks. So one of the key relevant benchmark that we would be looking out for would be the QUET ETF, which tracks mainly the China tech stocks. So this is something that I believe is very important when it comes to stocks investing. Because when you do stocks investing, when you pick stocks, the whole purpose is that you want to be beating the markets. So if today you cannot beat the markets that you are mainly,
Index, right?
yeah, you will be better off just buying the index and you can save on some effort. So this is a goal that we have for our investment portfolio every year.
I see. So it's more of like being committed to it. So
Yes.
don't use a New Year resolution as a way to, push the thing to the next year.
Yeah, that's
That is
right.
true. I actually, now that you mentioned this, right, I actually recall this. Someone actually said something about if you set, a yearly goals, you only fail once a year. But you set daily goals, right? Small daily goals, if it gets a lot more painful, but it forces you to move ahead because
Yeah.
if you don't, right, you fail every day.
Yeah, and every goal,
Yeah.
every small goal that you achieve, it becomes very motivational. You feel
Yeah.
motivated. Okay, I achieved this. I'm going to move on to the next one. Yeah.
Oh, that's a very interesting perspective. Thanks, the ladies, for sharing. Let's hear from the gents now. Who shall begin? Alvin, maybe?
Okay. I only have one resolution, and it's not a personal one. It's more like for the business, right? Because I run a business, and it is important because we work as a team, and there must be a goal that everybody knows where we are going. Otherwise, everybody will be just doing what they want, right? And they may not even know that they should do this or do that. So I think having a business goal is important to align everybody, and we move together in one direction. So for me, it's more like a business goal.
I see. So what is that business goal? Comfortable to share, no?
Not the details, but
Okay.
definitely it's a revenue goal.
I see.
So we are aiming to almost double our revenue in 2022. So that is what I
Great.
want.
I think it's always great to align everyone a direction so everyone is ready for the next year.
Yeah. So we roll in the same direction.
Yeah. Okay. Thanks for sharing. Yeah. Chris, how about yourself?
Okay, so first I'm going to make a disclaimer. While I do have fairly elaborate plans and resolutions every year, my record of keeping them is not particularly strong, right? Because there's always something that will happen during the year that would probably give me something better to do. So for 2022, I have two resolutions. The first resolution, I've set it relatively early, which is to put 0.5% of my portfolio into cryptocurrencies. And we are so far ahead that it is likely to be met before the year has ended. So I'm not very sure whether it will remain a New Year resolution if it's already done. Right? I did the bulk of the work this morning, in fact. All right. The second resolution is a hard one. It is another class of these resolutions that I do not even know whether I can complete it within a year. Is to figure out whether is it feasible to actually hold on to two jobs at the same time, right? So I'm part of this business with Dr. Wealth where I teach early retirement. The question is it possible to squeeze in a day job on top of that? And so next week I'll be speaking to some law firms to see whether there's an opportunity to actually pursue like what I've studied for my law degree, which I've generally been ignoring for the past 3 years. The ultimate aim behind this is this experiment that I want to do. I want to see whether is it possible to have CPF contributions from two sources, which I think a lot of people are talking about, but very few can actually do. See? Yeah, so this is something which I've been thinking about, but I think it will take a couple of weeks for me to get the thing up and running. Yeah, but the good news is I think by December, I think one of my New Year resolutions would have already been met. Yeah, which is
especially
to,
with the crazy prices, right?
yeah, I'm trying to see whether it's possible to get $100 every month in cryptocurrency use. Okay, taking note of the fact that for the listeners here, that this is actually very high risk. All right, I'll leave it at that.
Okay, yeah, but anyway, for the
Yeah.
viewers out there, just a disclaimer, right? This one, don't take this as financial advice. These are just resolutions and opinions that we hold. Okay? Yeah, thanks for sharing, Chris.
Right.
Okay, so now that we are done with reflections, we are gonna do something that the viewers will be dying to know. We're gonna make predictions. So if you had to make a prediction, what do you think is a trend that is set to explode in 2022? Okay, so before we go into that, again, disclaimer that this is just for entertainment purposes. and it's not investment advice, okay? So for this, let's start with the gents first. Alvin, what is your prediction?
Okay, so first of all, I'm very bad at prediction, so take with a pinch of salt whether you will come true or not, alright? For me, I do think that the risk of inflation is really getting more and more serious, right? It started off with we see some of the commodity prices going up in 2021, and the initial narrative of the central bank were like, oh, this is transitory, this is just going to blow over soon, right? But the tone has since changed. The Fed has actually dropped that term transitory, and you look at the Monetary Authority of Singapore, they have also so-called, they no longer make the SGD flatline anymore, right? So that is a stance that they think that it is good time to appreciate the Sing dollar a little bit to combat inflation, right? So and recently they also bought a lot of the gold that was reported in the news. So it seems like even the central bank believe that maybe the risk of inflation is coming, right? And it hasn't come down for the past few quarters. And I do think that there are a few reasons that can drive this inflation further. So the number one reason is the monetary policy that has been adopted by the world, which has been a very loose monetary policy, printing money, flooding the markets with a lot of money, and that has been happening since 2008 financial crisis. And of course, the printing has not shown any consequences in these 13 years, but we never know, right, whether the consequences will eventually come, only on a very, very delayed kind of manner, right? So that is one, because when with more money sloshing around, the prices will naturally goes up. And the second thing is that because of COVID last year, the supply chain has been disrupted, and when it comes to supply chain disruption, it's not a very easy problem to solve. It's very complicated, right? Especially when we're talking about a globalized economy where there's a lot of moving parts. You never know where is the choking point, right? And when that is hard to solve, your supply goes down, you will have, when demand comes back during the recovery, you will again have a price shock in this case, right? So inflation seems to be increasing given all these reasons, because these are not easy to solve problems, and if inflation goes up, there could be a lot of repercussion to even the lives of everyone, right? Because your electricity bills are going up. I just saw the news, someone was paying like what, $400 over in electricity bill in the latest month. We used to pay about sub 200. So people will feel it, right? If we end up in an inflation period, and if it's a hyperinflation period, I think a lot of lives will be disrupted in that sense. So I hope it doesn't happen. I hope my prediction is wrong, and we don't see a hyperinflation scenario in 2022.
Yeah, thanks for sharing your prediction. I think it'd be pretty scary, especially if people are holding too much cash, right? So inflation is a very scary thing. Yeah. Let's move on to Chris.
Okay.
What are your predictions for 2022?
So, my biggest prediction for 2022 is the arrival of the COVID-19 pill. And we are seeing some very positive results, particularly for the pill from Pfizer. I think it's called Paxlovid, I think. I'm not too sure whether I'm getting it right. But it could potentially reduce the number of hospitalizations by about 80%. So I see the deployment of that pill to be the main turning point in the war against COVID-19. And subsequently, once every household gets a package that we could pop and swallow for the next 5 days, if anybody were to get infected, hospitals then wouldn't be overworked, right? And we can then open up the economy. So I think that's number one. And that's the reason why I believe that 2022 is largely going to be a positive year. So that's where I might be wrong, but I'm cautiously optimistic. The second prediction is very similar to Alvin. It's regarding interest rates. And I believe that the Fed is going to accelerate the tapering, right, over the next few months. And then after that, we're going to see interest rates being raised earlier than what is being said today, right? One of the consequences of that, which is also a wild guess on my part, is that I'm already seeing in my quantitative models a return to value investing. So you're talking about a lot of growth in the tech companies, but we're slowly looking at all these traditional factors like price to book value, price to earnings value. These factors coming back into play, and you're going to see a little bit of rotation out of tech, and it's not going to be just China. I think it's going to involve the US as well. So this will have a consequence on how I position my investments. But the truth is that actually we've been positioning it for a very long time, and even if we are wrong for 2020, we've been wrong many times before. Yeah, but if we are right, I think the financial rewards are going to be quite substantial. Yeah, so that's my prediction.
Okay.
Yeah.
Oh, thanks for sharing.
Yeah.
I think interestingly, at this point in time, the China stocks, the growth stocks may become like value stocks. Because of
Yeah, because P is already very low. P is already very low. Yeah.
yeah, even like all the
Historical low.
Yeah.
Charlie Munger, all these, they're all
Yeah.
going in to buy.
Yeah.
Value going in. Yeah. Yeah, thanks for sharing. Yeah, let's move on to the ladies. Perhaps let's start with Kathy. What's your prediction for 2022?
Okay, I would think that emerging technologies like AI and automation have growth potential. So the global AI market is expected to grow at a CAGR of about 35% over the next 5 years. So those companies who are investing in AI are now like focusing on creating better customer experience, improving on their decision making, and innovating their product and services. So I think that could be the trend. Yeah, but that said, at the Joyful Investors, we allocate majority of our funds onto companies with economy mode. Yeah, and also on companies that we see will be going to be there to last for a very long time. Yeah, so if there's a small chance that the company may not succeed, we will not even invest in it, because predicting a future is a very risky game. Yeah, but only on some very rare circumstances where the risk to reward are very attractive, then maybe we will trade on the momentum by using option strategies to reduce our risk and limit the downsides. Yeah, but I know some investor would like to ride on a trend. Yeah, so my advice is maybe for these investors, you can adopt the barbell strategy approach, which is to allocate a small amount of your total assets onto this more risky venture, like say 5 to 10% to reduce your exposure.
Would you say that then putting into the trend you're saying, like automation and robotics, all this, right? Would it be considered the more trend following kind of?
I would think it's a trend following.
Okay, I see.
Yeah.
I see. Okay.
So maybe just a small amount.
I see. Okay, yeah, I guess I agree also, because ultimately we should not base our investment decisions on predictions, right? Because
correct.
anything we can be wrong.
Yeah.
If you're right, very good, but
Yeah.
I can be wrong.
Correct. Don't follow the trend. Don't really follow like what people say, but it should be based on your own conviction.
Yeah, and not blindly following.
Correct.
Okay. How about yourself, Hazel?
Oh, I think our panelists have all given very good insights as to some of the
That's for the last.
That's for the last note. Yeah, they have given very good insights as to some of the possible events or trends that may happen next year or even in the years to come. And I agree with what Kathy has mentioned. I think emerging tech is one of the key growing areas. Recently, we heard a lot about metaverse as well. So that could be something that investors would want to look at. Although I personally don't think it is going to be exploding just next year. I think it will still take 4 years before the whole concept becomes more mainstream. Well, but I could be wrong. But the whole point is that even building this metaverse concept, we need those emerging techs. Yeah, so with escalating implementation and use of emerging tech, that can also bring about new opportunities and tailwinds for some other industries, for example, semiconductor industries. Yeah, but that said, investors have to be very careful when we are embracing all these new trends or new opportunities in the markets, because many times things are already priced in. If you realize that everyone else around you are all chasing after the same thing, the same trend or the same opportunity in the market. So what's very important in investing is that while we are looking out for the upside gains, always remember to at the same time consider a downside risk as well, so that we will be able to earn more sustainable returns over the long term. Yeah.
I mean, that's true. If everything is priced in, actually the risk is higher, right?
Yes.
Okay. Okay, so we've come to the end of this episode. Thank you all for watching. Wish you all a happy new year and a prosperous 2022. Bye bye. Happy New Year.
Happy New Year!
Bye.